Hello, Achiever Plus Financial Literacy Module learners. Today we will be looking at market movements together. What moves share prices? We have looked at this before together. It is the law of supply and demand. Share prices go up in price and down in price because of supply and demand dynamics. If more people want to buy a share, the demand goes up, it rises, and the price goes up along with the demand. If more people want to sell a share, supply rises and the price goes down. Nobody wants it. News and events are what change people's desire to buy or sell. Think of it like fruit at a market. If avocados are scarce and hard to find, but everybody wants avocados, then the price goes up. On the other hand, if avocados are lying all over the place and there are too many and they are getting rotten and nobody wants to buy any, then the price goes down. A South African example is when Naspers reports exciting news about its investment in Tencent. More people want Naspers shares, so the price climbs up. Market movements are also caused by company news. Share prices go down when there's bad news, and they go up when there's good news. Good company news makes investors feel confident, raising share prices. Examples include higher profits. For example, if Standard Bank announces record earnings, then its share price goes up. New products. When MTN launches faster internet services, its share price goes up. Strong leadership is also good news. A respected and honest CEO joins Woolworths and he has great communication skills. Then Woolworths' price goes up. Bad company news makes investors nervous, lowering the share price. Examples include falling profits. For example, when Shoprite reports lower sales, then its share price falls. When there are leadership problems, the CEO suddenly resigns, or the leadership of the company are doing fraud or stealing money or making bad decisions. Any kind of scandals or lawsuits damages the reputation of a company. So, just remember to follow the company news to understand what's happening with share prices related to a specific company. A very famous South African example is when Steinhoff revealed the accounting scandals that they had been involved with. The share price dropped by more than 90%. Marcus Jooste, who was the Steinhoff's CEO, committed the biggest South African fraud and dishonesty that has been recorded until today. Another thing that impacts the market movements of share prices is the economy. In fact, it's probably one of the most important things. The country's economy affects almost every company. High interest rates, for example, are good for banks. Standard Bank, FNB, they earn more from their loans. They earn more when they lend money. But bad for car dealers and retailers because loans to borrow and buy cars as well as other items become more expensive, and so customers buy less. Inflation, which means prices rising, hurts grocery prices, which increase. Consumers cut their spending, which hurts ShopRite and Pick n Pay's share price. Unemployment. If fewer people have jobs, then fewer people have money to spend. When an economy has high unemployment, it affects all the retailers that are selling their goods in that economy. A South African example. When South Africa's interest rates rose in 2023, bank shares did well, but retailers struggled. So when interest rates go up, the cost of borrowing money goes up. So banks make more money and their share prices go up. But retailers sell less because people have less money to spend and their prices go down. Global events have an overarching impact on market movements and the movements in share prices. South Africa doesn't trade alone. The world affects us. Oil prices. If global oil prices rise, Sasol benefits because it sells fuel. But taxi operators and airlines pay more for petrol and costs go up. When there are wars and global conflicts, this can make metal and gold prices go up. It is very good for mining companies like AngloGold Ashanti. This is because people think that gold and metals make safe investments and they buy more of these during uncertain times. When there are global recessions, countries buy fewer South African exports, mining and manufacturing shares can drop. Pandemics like COVID-19 led to airline shares collapsing, but technology shares grew because people stayed at home. In South Africa during COVID-19, companies like ShopRite did well as people stocked up on essentials, but airline Comair collapsed. So COVID-19 was equal to retailer share prices going up, plus airline share prices going down. Market movements matter in competition. In the JSE Schools Challenge, success isn't just luck. It's about spotting what makes share prices move. Here are some strategy tips. Follow the news every day. Big headlines often signal price movements. Think like an investor. Will this news make people want to buy or sell? You don't need to guess, just connect to the news, understand supply and demand, and figure out what the next price changes are going to be. Here are some example strategies for you. If MTN announces cheap new data bundles, think, will more people use MTN? Yes. Then profits will rise and share prices are likely to go up. If a mine closes due to strikes, think, less production, profits will go down. The share prices are most likely to go down. Well, that's it for today, Achiever Plus Actualizers. We are so proud to have you with us and to show you how you can make money on the Johannesburg Stock Exchange or any stock exchange. Good luck.